Oh, we're not doing a countdown at all then. Okay, guys, welcome to the stream. That caught me off guard. We were supposed to do a countdown. And so today's discussion is going to be on developing a strategy. Guys, we have Seb with us today because he is a trader. He was trading with us back in the day, back in the Hunter FX days. That's where we had met. And hopefully he can advise us on some of the methods that he was using as well. I'm going to discuss some of the methods that I was using to develop a strategy here. But first, we will be doing the market breakdown. As usual. Okay, let's get that on the stream here. Right. Okay, cool. Okay, thanks for getting patient, being patient with us, guys. I thought there was going to be a countdown, so I thought I had a few minutes left. So as usual, guys, just remember, if you got questions, Emma's going to be reading them along. She's going to be popping things up on the screen and answering any questions along the way. So make sure you post your questions there. And by the end of the stream, somebody who has asked a nice question, a brilliant question, one that's thought-provoking about the topic, will be given a 50K challenge account at maventrading.com. Okay, so guys, Bitcoin, once again, I know you guys, you want to see this going up, and I hate to be the bearer of bad news, but it's not going up. It's been going down. Last month we closed super bearishly. Now you may have said, why did we not retest off of that level? Well, it's because we were actually doing some weekly jazz here, retesting off of this zone here. And if you are looking at Bitcoin, it is actually on different charts as well that it's rejecting off of. So you have to look at both. It did reject off of this level here on a different chart on Oanda rather than on the crypto exchanges. So that being said, what's going to happen next? Well, you might be saying, hey, look at this rally. This is the bottom. We just swept the lows. We did not sweep the lows. Weekly, again, closed super bearishly. We are rejecting once again off of this level. So continuation to the downside. I am still targeting, and I am still personally in a trade that has been short since the top of that short bear trend. We're looking at 40K roughly, right? Why do I say 40K? Well, we're basing this trade off of monthly levels. The monthly level that is untested is way back here. We're looking at about 40K, maybe the lows here, maybe these lows here. If we're really in a bearish case, which we'll play it out, we maybe come down back here, right? Everyone wants to see this going to the moon, and I fully expect it to be going to the moon soon, but that's just not what the charts are telling us. So do not hold Bitcoin right now. Do not hold crypto. That's my opinion. It's too high risk. S&P, similar thing. Same sort of thing. Weekly closed back within this range. We tried to break out, close back within the range. We are going to be testing these lows here, right? And that's the next level down, okay? NASDAQ, similar idea, rejected off that level here. Guys, we predict this every single week. Follow along. Make sure you have a note in your calendar that every single week you'll tune in, because that's the market analysis. Let's jump into our discussion. So guys, again, today we're discussing the developing a trading strategy. So there are three major pillars, first of all, in trading. We talked about psychology last week, and we're gonna get Louise back on in a few weeks, because that was a really good discussion. You guys had some good questions for her, and we're gonna dive deeper in the following weeks. We also have risk management, which we should do in a future week as well. But the main one you guys all want to learn here is, I can see chat going nuts already here. It's lovely. How do we develop a strategy? Okay, guys. So the stages of traders, right? I got some notes here. I got 5+1 bonus stage of a trader, guys. And you can see if you can relate to these. So, and you can tell me in chat which stage you're at here. So I'm going to quickly say them, and then we're going to break them down. We can get some discussion from Seb and Ryan here when I break them down. So 1, we've got the excitement and the euphoria and the I'm going to get rich quick sort of stage. This is when you go on YouTube and you say trading strategy, right? And you get some guy who's, 20 years old, and he says, hey, I made $1 million in the past year, and I just started trading at 19 using RSI, crossovers and moving averages, right? And you're like, wow, that's me. That's me. I'm going to do that in a year, okay? And so everyone does this because it's the entry level to trading. Because otherwise, if you don't do this, you're not gonna start, right? And number two, you start researching all these different tools. You start finding, the Elliott waves, the weird stuff, the grid trading, and you start experimenting with everything, and you make it really complicated, and you got these lasers all over your chart. Then you start going into like smart money concepts. That's the third one, ICT style, price action based trading, raw chart trading. These are all the slang words, and you really start getting an understanding of the, how shall I say, the nuances of trading and the terminologies of trading. And now you're a trader, right? Now you know what everyone's talking about and you get the gist of everything. Now that's when the actual trading starts, guys. This is my opinion. Seb, Ryan, I'm going to break down the other three stages here in a second, but give me a breakdown of your experience with trading and, how do you relate to those three stages so far? Because I think everyone went through all three of them. Seb?
Yeah, yeah. I think you broke down those first three stages very well, and anyone who's been profitable can definitely relate to the first three stages. I think definitely the first stage is one of the hardest stage, where you're right, a lot of people would come in and think, I'm going to get rich quick. This is such a easy game for me to make. All I've got to do is draw a few lines on a screen and I make money. But it's not as simple as that. And everyone will tell you that you're very likely going to lose money in that first stage. And I was one of those people who also lost a lot of money in that first stage, thinking this was an easy game to play. And my personal experience was that I remember buying an FTMO challenge in the first week of discovering trading. And I managed to pass that challenge. I have no idea how, looking back. I was just pressing buy and pressing sell when I felt like it. And then I went on to fail many more challenges after that, after developing my strategy, which goes to show how difficult something like trading can become and how you can get lucky, and that can lead you into a false sense of security. And it really does take a very, very long time to develop your strategy to become consistently profitable. And I see it daily with a lot of the traders we have at Maven, how many challenges they've taken to actually receive a payout. And it's a really, really tough industry to get into, but also the tougher you work at it, the more rewarding it's going to become in the long run, which I'm sure you'll touch upon in the next few stages of being a trader.
Yeah. And just because I'm curious here from chat, let's see put a 1 in chat if you got lucky early on and it gave you a false sense of security, and put a 0 if you've been struggling and you've been grinding this entire time and you've never gotten lucky, but you still have the determination with you. I want to see what chat says here, what side people are all on. Okay, as you guys do that, yeah, let's move on, because these three stages, right? 1, 0, and it's about 50-50 so far. Let's see more, guys. And these three stages are, they're all well and great for the development and for extending the amount of time you're trading, which is really good for the broker side because they're collecting commissions, right? But as a trader, you want to get to point starting to profitable as quick as possible. And that's when stage 4 comes in. That's when you start testing with your ideas, right? You get a deeper understanding of your personal concepts. Tons of back testing and trial and error come at this point. And you may not be in the stage yet. You might just be kind of stuck at, still researching, the different price action models and support and resistance, which can work, but they only work when you start developing the ideas behind them, right? And everything can essentially work, but you have to make a personal strategy. So that's number 5, is now personal strategy has been made. You now have something that works, okay? You made money over the course of a month, okay? Now, the issue with that is there's still a lot more work to go. And that's probably going to be another 5 years of developing that same strategy before you can be comfortable with the market and you get the ebbs and flows of it. And you're kind of just showing up day in, day out and not pressuring yourself so much anymore. And that's the ultimate goal that we want to get down to. So the whole process probably takes about 10 years. That's my guess. Ryan, what do you think about the stages of the trader? How long do you think each trader should stick at each stage, right? How long do you think it would take somebody to get to their personal strategy made, let's say, for example? You got mute on.
I always do that. John yelled at me last time to keep my mute on when I'm not talking, so now I always forget to turn it off. I'm kidding. Yeah, I mean, I don't think there's an exact time frame that you can put on each stage because everyone's different. I do think like the get rich quick stage sucks people up so much, and I think it's absolute shit. And that's a stage that you should stay at very, very short period of time. It's very easy to stay in that stage long period. I think the more important stages to stay in for the longer period are developing, like you were just talking about, developing what works for you. And that's not only your strategy, but I would recommend finding the instrument that you want to trade, whatever pair it is, gold, indices, crypto. Everybody's different. Everything trades differently. But I would hone in on one thing once you find that strategy and just develop the craft to the extent that you can over and over and repetition and consistency and so on. So I would stay on the later stages longer. I think people that are successful stay on those stages longer. The initial stages, you learn really quick that it's not very easy. There are people that definitely get rich quick, but that's not the norm. And to be successful, like I've always said, it's okay to clip profit. It's better to clip profit than lose your account. So, to be trying to swing for grand slams and things every single trade is not a good strategy. It's a very stupid strategy. But yeah, that would be how I would kind of phrase it. I would stay on the initial stages that everybody goes through, very short term, and I'd focus more on the stages later in the game because those are the ones that develop continuity and a longevity within the space.
Ryan, that is exactly the next thing that we want to dive into here. My notes say, how do we get to stage 4 quicker, right? And that's exactly what you're saying is we need to skip over following people's ideas, right? We need to create our own. Now, Seb, you were able to find an idea that worked for you. I remember trading with you. You had a little bit of, you were kind of in the beginning stages of profitability, nothing 10 years down the line, but how much time did you waste on stages 1 through 3?
I don't think there's any time to waste on stage 1, 2, 3, because on stage 1, 2, 3, that's what progresses you on to stage 4. For me, I suddenly realized that this was not a get rich quick scheme, and the only way to become profitable for me and the best way I did it was through back testing. I think that's a very, very valued skill because what back testing does, you can purely focus on the strategy that you have, and the strategy that you have needs to align with who you are as a person. For me personally, I was much more of a swing trader. I was comfortable holding trades for 2 days, for 3 days in order to make 1 or 2 R. And that was fine with me. I couldn't deal with the stress of scalping, in high volatility markets. But for other people, that may be too long of a time to wait for 2 or 3 days for one trade and one setup. So I think it's very important you find what fits for you personally, find a pair, trading instrument that fits for you perfectly. I think if I traded Bitcoin, I'd probably have a heart attack within the first week due to the volatility. And really, really backtest your strategy. And then if you want to test your strategy, buy a smaller account to begin with, buy a 2K account, buy a 5K account, just to kind of know what it feels like to trade within an actual prop firm environment. And then you can begin to scale up and improve your profitability with a firm.
Sure. Yeah, that's an interesting note, because I was just talking to somebody the other day that said on an interview that she loves scalping because it's less stressful, right? Because once you're done, right? And I agree with her. Is like, if you're taking a swing trade, how am I supposed to go for lunch and be calm, right? when money's on the line, right? It's a very stressful thing for me. So here's some tips I kind of wrote down that we can discuss. And I want to get your guys' feedback. So step in whenever. Questions, Emma, if somebody has questions that are relevant to what we're discussing, just pop them up and butt in and ask, okay? So number one, I think ignoring indicators is one of the first things that you should do, and just start looking at the chart with basically maybe choose one indicator, so that you can simplify things, right? A ton of indicators are going to make things really complicated. I'm not sure your guys' take on that. Any indicators that you would recommend to developing your first strategy?
Yeah, I think if there was an indicator out there that guaranteed profitability, every single person in the world would be using it. So I don't think there's not an indicator that shows you where the market's going to go within the next hour. However, if there's an indicator you've chosen, maybe it's 30-day moving average or anything like that, that you feel benefits your strategy and makes you feel more confident and gives you a sign to enter the market, I don't think there's any harm in it. I just don't think you can't 100% rely on an indicator to tell you the market's going to go up or the market's going to go down.
Yeah. And so Emma just popped a question there. What indicators are useful then? Personally, I wouldn't use any, but if I were to use one, and I didn't understand what I know about trend, I would use a moving average. I would use maybe a 14 period moving average. And that way it's somewhat quick, but there's still some average to it. And then that would be determining my bias on the trend.
Yeah, I would also go with a moving average as well. For me, it's very impactful in saying where the market is likely going to be heading, and then you can form your basis around that.
So that brings me to my next note here that I wanted to discuss is, guys, you don't make money off of your entries. You make money off the trend, right? So if you are developing your first profitable trading strategy, you want to put 90% of your effort into figuring out what the trend is and being accurate with the trend, okay? Because 80% of the profit is made within the bull market, right? So as long as you're just sitting in the right direction, you're probably going to be right. So you can just wait around for a while. Your entries and exits are not super, super important. What do you guys think about that? Would you focus? Am I wrong?
I mean, I think you're right. I'm with you though. Like I don't use, I've never used indicators. I'm a bad person for these type of questions because I've never back tested ever one time. I've never used an indicator. I think, 80% is done in a bull market. And like for me, what I do, you guys, I literally will watch a chart for an hour and I'll determine based on how that chart is bouncing if I want to place a trade or not, and if I want to play it. If it's got heavy floors and ceilings, which we call them when we're in the derivative world on Wall Street, otherwise, tops and bottoms, and resistance points, then I'll trade it. If not, then I won't. It's as simple as that. I've never looked at commissions, spreads, nothing. I've never looked at one of those things.
Right. And there's a question on the screen here. Seb, why don't you answer it? Have you ever adjusted or tweaked your strategy after a series of losses, even though your original plan indicated that you should have stayed the course?
I haven't. I remember my strategy very well because I had back tested it for hours and hours and hours. I remember back testing it on the hourly chart and 15-minute chart all the way from 2015 to so I back tested 6-7 years worth of data. And what that data showed me was that my strategy was going to be profitable in the long run each quarter. So for me, if I went through a string of losses, that was just variance showing that I had bad variance and that from something called the law of large numbers, where you can have over 1,000 data sets. Your strategy is highly, highly likely to become profitable. So it's having confidence in in your strategy that you have, and also having the emotional control that if you do go through a series of losses, to not think, oh, my strategy isn't working anymore. I'm just going to tweak my strategy here and here. I'm going to put a bigger lot size in. It's very important to have that emotional control in you, because then it's highly likely it is going to turn around at some point, as that's what you've worked on and that's what's more than likely to happen. So I'd definitely recommend not changing your strategy.
Good. Yeah. And so this is another question kind of on the screen here. How do you effectively evaluate your new trading style? And I think Seb is answering that quite well with back testing. Now, I think in the trading world, we largely need to balance our gut with our mind, right? So what I mean by that is you want to follow the strategy that makes your heart and your gut feel happy, right? You want to, because generally new traders are actually better than intermediate traders, because they just look at what direction it's going and they say, hey, I got a gut feeling, I'm going to buy it here and I'm going to sell it there, right? They're usually better because they're not overcomplicating things. So get the idea based off of your gut. Okay, so why might things be happening? Why is it going up right now? Why are we reversing at this point, right? Something that just kind of sparks an idea, and then go into the back testing that Seb was talking about. And, say, okay, every time I see that thing that is interesting to me, because, maybe I'm a scalper, maybe I'm a swing trader, the style that fits well with your heart, right? And then you can use your mind. And that's how you confirm your gut instincts, right? And once you confirm your gut instincts, then you can stick with that strategy. And how do we make sure? The question was, how do we evaluate the effectiveness? Well, how much money do you make? It's pretty obvious here, right? It's trading is the beautiful thing where you know how good you are by how much money you make, not how often you're right, not how far one trade went. It's a matter of, I had $100, now I have $100,000. That is a good strategy, right? If you can do that in a year, boom, that's incredible. You're the best trader, okay? But somebody who hit a Hail Mary bet, that's random.
Yeah.
Somebody who has a 90% accuracy trading style, and that is them playing on their ego. The only thing that matters in this game is money. Seb, give us a breakdown of your strategy. Leroy wants to know.
Okay. So I might get some hate in the chat for this, but I was a big fan of ICT and used a lot of his concepts that he did. So I would trade on Euro USD and the pound against GBP USD. And I would look for a market breakout, a big retracement where there would be a fair value gap. I believe that they existed. And then I would wait for the market to come up to the fair value gap on either the euro or the pound. I'd take a look at the moving average to see where the trend was going. And if the trend was going in the direction where I thought the market would bounce off the fair value gap, then I would short from that point. I'd put a stop loss above the retracement. And I'd typically only shoot for about 1.5 to 2R per trade. And it would typically take about maybe just 1 or 2 trades a week. That's how irregular that my strategy would come up. I think what was really important for me in this strategy was I would have a checklist of about 5 to 6 things that I needed to see in the charts in order to be doing it. And this is something I'd definitely recommend for anyone, is to have a checklist, because then you're not being emotional with it, you're being objective with your decisions that you make. And if all of these confluences come into place, then you've done what you've needed, you've tested your strategy over and over, and you know that this is exactly what you wanted to see in the markets. And then you can set your stop loss, set your take profit, and then you can just leave and wait for a notification of hopefully hitting take profit. But if it hits stop loss, there's going to be another trade, hopefully just around the corner. And that was the strategy I did, and strategy I still do to this day.
Yeah, good. So, whenever people talk about ICT, it's really a torn thing, guys. You guys are an ICT fan, post it in the chat if you're an ICT fan or if you think it's all garbage. Right. And I'm trying to remember what you had mentioned there. Because I wanted to discuss on it. Anyways, do you think journaling plays a huge role and what should you include? Right. And so as we were discussing with Louis,
It's Louis.
Difficult.
Yeah. Last week, mindfulness is one of the most important things with everything in life, really, right? Mindfulness really comes down to journaling as well. It's self-reflection, it's idea creation. And guys, I don't come up with new trading strategies anymore. But I still journal. I journal for different things, and it helps you reflect on your day, what's happened, and creates ideas. And when you start actually writing things down, you start building new ideas and you start retaining information much better. So just the fact of writing what happened is critical for your growth and new idea creation. Guys, did you journal? Did it help you when you're developing your strategy? Seb and Ryan?
Yeah, I mean, I journal with everything in life. So I do write things down. That does help to reflect and go back on things and, moving forward. I do that with everything, though. It's a very common thing. And I know, Hunter, you and I have talked about that. I always have a book next to me where I journal just almost anything that you can imagine, positive things throughout the course of my day.
Great. All right, guys, we're going to be wrapping up here in a minute. We'll get a couple more questions. Next week, we're going to be discussing refining that trading strategy. We're going to hopefully get Seb here again. Today was more the stages of the trader developing from that initial phase of, that euphoria and these get rich quick schemes, developing yourself into, the smart money concepts, and then ultimately realizing that you're not going to make it unless you learn it on your own and start back testing. So next week we're going to discuss, okay, how do we back test, right? And I think that's going to be a huge one. Once you do have something that does fit with your style of trading, that's your goal, guys. Here in the next week, I want you guys to do some homework, figure out what your style is, write it down in your journal, everything that you need to know. When are you wanting to enter, or how does your day look like, right? Things that work around your life. If you want to use indicators, if you want to use price action, write it all down. And then we're going to start coming up with ideas next week, and we're going to start back testing them so you guys can develop on your own. Make sure you grab yourself a Maven Trading account at maventrading.com. Guys, Emma, do we have any more questions before we go? You got mute.
So we did have a couple things that just kept popping up, so I made notes of them. People were asking a lot about identifying entry and exit points. So I don't know if there's any tips or tricks that anyone wants to share there.
Yeah. Entry and exit points. So my personal opinion is the trend is basically the only thing that matters. And I've pretty much confirmed that. I used to really focus on what's the perfect entry. And that was the big flashy thing to do. Everyone wants to know what's the perfect entry, what's the perfect exit. I got 3R, 4R, whatever, right? No. Get in, get out as fast as possible. Follow the trend. That's what I do now. I don't even use entries anymore. Seb might disagree because he's using the ICT models. That is much more traditional way of styling it. So I'll let Seb finish that question with something that's actually useful.
Yeah, for me, it just comes down to what your strategy is. I always, like I said previously, had that checklist, and that checklist included where my entries and exits needed to be. So it was very methodical, very objective way of looking at where to put entries and exits. And I was a big fan of it. It helped me stay calm. It helped me not put emotions into what I was doing. And yeah, I would definitely recommend putting in strict entries and exits into your trading.
Now, Ryan, you have a third style of trading. You do range trading, which I don't understand because I don't think ranges exist at all. But why don't you break that down
Yeah,
or
so I
increase
mean,
in methods?
mine's very, it's different, and I don't necessarily recommend it for anyone, but I have a limited amount of time. I have kids, I work, so I literally will, my two things are Bitcoin and gold. So if I want to trade, I'll have an hour carved out, and I'll watch a chart of it, whatever's going on at that given time, what's going on in an hour, and if it's bouncing around at given points, up down, hitting resistance each time, then I'll place a trade. I scalp them usually, so I'll be in a trade, and my trades usually last, I guess, anywhere from like 2 to maybe 10 minutes max. um and that's it. Like it might only take over the course of like 30 minutes that I might do this, and because of the limited time and sporadically that I'll look, I might place like 2 or 3 trades over 2 months, like literally. I mean, I'm definitely not someone that I would doing this full time, and someone really wanting to learn. Definitely you and Seb are much better you know strategies or teachers to follow, but mine has worked for me, long term, just based on my lifestyle and the limited amount of time that I have just due to kids and things like that.
Guys, when have you ever seen a board on a prop firm with this much trading skill? Ryan's a range trader, Seb is an ICT trader, and I am a trend-based trader. And get your questions for us next week, because we're going to help you devise your own trading style. We're going to wrap it up there, guys. Make sure you figure out what style of trader you are, and then we're going to break it down. We're going to figure out the methods that work for you. Personally, each and every individual one of you, we're going to go through and help you. So maventrading.com, check out there. If you want to practice on a real account there, a larger account rather, not real funds until you pass the challenge, then you can get payouts from us. Okay, guys, I'll see you next week. Thank you for watching.
Thank you, guys. Peace.
Thank you.
Bye, everyone.
And Emma,
Yes.
you can pick a
I've
winner.
already got it. I've already got the person. I'll be popping it in the comments, and you guys just go into Discord to claim your prize.
In the YouTube comments on the Maven Trading channel is when you're going to post it.
That's exactly where I'm posting.
All right. Thanks, guys. Ciao.